I want to share just a small discrepancy between inflation and monetary supply and how it could potentially affect prices even more than what people are expecting. Real quick, I want to talk about the housing moratorium ending. And for people thinking that the powers that be are about to evict millions of people, they got another thing coming. They're most likely, in my opinion, going to continue to subsidize individuals during these downtimes. They're going to kick this can down the road till everyone is essentially gasping for air. They're not going to evict these people. They're going to either help them directly or they're going to help the housing. They're basically going to put everyone on Section 8, essentially, a version of it. The other thing is unemployment ending in September. I do not see this ending. I see other forms of subsidies to individuals who have been out of work or basically chosen to be out of work. They're not going to transition these people suddenly back into the economy. They're not going to, this money does not exist in terms of real economy. It exists in the sustaining of our economy is based on this stimulus, is based on the moratorium. Without it, we would not be able to be what we are currently. So they're going to continue to print money. They have to. They have to, because they're not going to experience the pain. They're not going to, it's like a drug addict or an alcoholic. It's been a metaphor made many times. They're not going to stop until it kills them. If you see here, the inflation calculator is something that I wanted to compare the difference between inflation and monetary supply. And this is very, very key, because if you look at, let's just say, median house prices, in 1980, median house prices were $64,000. Today, they're $360,000, which maybe that's not all that significant to you. But if you were to go here and do $64,000, you'd have an average median price of $209,000. So that's a 60% overvaluation. And the same thing can be said for the Dow Jones. Also, a 60% overvaluation in both of them relative to inflation. But inflation is calculated based off of relative prices, not monetary supply, which is the actual amount of money that has been created. And I find that to be a true indication of what to expect. This is a article SD Bullion put out, which I like, and it shows that the monetary supply has ever increased. And you can see here, this is showing the gold chart with it, that in 1980, the price of gold exceeded the monetary supply. And you may have read or heard that at that point in time, we would have been able to go back on the gold standard if we so chose. But instead, interest rates were raised, the dollar grew stronger, and in fact, gold diminished down to like $200 in late 90s and early 2000s. And which was, if you think about it, relative to the monetary supply, was tremendously undervalued. And if a scenario like 1980 was to happen again, which it very well may, the valuation of gold, as you can see here, would have to be somewhere over $11,000. I suspect that it could go up to $50,000 because the monetary supply is going to continue to increase. And something to note is that how is it that if gold, which in 1980 was about $800, so if we were to do this, $800, which comes out to $2,613, still pretty darn undervalued, with gold right now being, I think, $1,700. And this article's a little bit old, so it doesn't show the updates, but we can suspect that these signs of monetary supply as well as the gold prices have gone up considerably since then. So again, I really think that we're going to see $50,000 gold at some point in time. But regardless, I find it interesting that inflation, and they use inflation as to be some indication of how much the dollar has been devalued. But if you actually look at inflation, it doesn't even compare to the increase in monetary supply. And to give another example, let's say I have something that's worth $10 and then the amount of dollars in existence doubles, that means that item is now should be technically worth $20. But the way inflation works is that certain items are subsidized, as well as money is hoarded. And so, if for things to have only increased 227%, but for the monetary supply to have gone up thousands of percent, is indicative of a time in the near future where prices will massively exceed any concept of inflation. And in fact, the inflation rate is a lie. It's relative to what your dollar can purchase. I get it, but it isn't relative. It has nothing to do with just how many dollars are in existence. So, and also, this money is somewhere, and for it not to be in normal people's hands and citizens' hands and working class people's hands means it's being hoarded by someone. So there's oceans of cash being held by someone, banks, individuals, and we are none the wiser to this growing wealth because our prices do not grow relative to this growing wealth. It's being hoarded, perhaps for the purpose of waiting for this reevaluation. I don't know. Or maybe it's, I mean, you have to just, it's just difficult to even know. Gas prices are a good example. They show here that with inflation adjusted gas prices haven't moved at all. But that's just completely untrue. And in fact, because gas is a commodity, if a very similar thing happened in the 1980s where you had the oil crisis, which could totally happen again, you could have a gallon of gas go to $50 easy. So everything is undervalued relative to inflation, but everything is tremendously undervalued. I mean, just like it's like ridiculously undervalued relative to the monetary supply. And if we have another situation like the 1980s, which point out the culture that we experience right now is very similar to the 1980s. It's very materialistic. It's very superficial. And I look at things like that to parallel the environment because people behave similarly in similar environments. And so I see this happening over again. I see this, and I could potentially seeing us going back on the gold standard. If we need to consume the debt with gold, it needs to be like $20, $30, $40, $50,000. And it's not the only precious metal that will be revalued. We're talking about palladium, platinum, and silver also exploding in price. So this is how I see things panning out.